Hi, this is Drew with Daniels Ag Services with your morning report. Grain markets all finished up higher yesterday and continue to trade higher this morning, being led by soybeans. Situation in Ukraine continuing to add support to the grain markets. That's not so much soybeans. The soybean market continues to surge based on weather concerns down in South America, thoughts that the crop's getting smaller, lack of Chinese cancellations. Granted, we did get some this week, but it's not enough. Still way oversold. We're going to need some more of those cancellations to even get back to 100% of what the USDA is expecting our exports to be this year. So a number of factors supporting soybeans. Obviously, Ukraine situation is more for the corn and wheat markets. Again, yesterday the Crimea Parliament voted to join Russia. Obviously, Ukraine wants to hold on to them. Russia wants them. We'll have to see how that situation plays out. As that will affect some pricing, even though Crimea is not necessarily an export destination or export port for the corn and wheat markets. It's actually a decent ways away, and those are running as normal. But as we've mentioned throughout this week, while this situation has been developing, any type of uncertainty like this where war could happen definitely is going to add some support to the market. So we got unemployment data released this morning. The economy added around 175,000 jobs, which is more than the 149,000 that were forecasted. That's adding a little rally to the stock market this morning. But the main thing we're all interested in is the grain markets, and we've got the latest WASDE report coming out Monday at 11 a.m. Central. Without further ado, let's take a look at some data on our trusty little whiteboard here. So I'm going to get in here close like for you. All right, so what we're going to do here, the black is estimates for the report, and the blue is what we got in February. So ending stock estimates for corn are 1.488 billion bushels versus the February USDA number of 1.481. Beans are expected to drop a little, which isn't a surprise given the strong exports we've had, and then the fact of lack of Chinese cancellations. Ending stock estimates expected to come in at 141 million bushels versus 150 in February, and then wheat expected to come at 570 million bushels versus 558 in February. Then we'll take a look at Brazil production. One of the main things that we've talked about here lately is how the weather in South America has not been great, especially in Brazil. These numbers were expected to rise from the February number. You know, some people talking 93 million metric tons for beans out of Brazil. Well, the rain they've got, some of the dryness they've got has actually reduced these numbers, and we see that reflected in the estimates here. Brazil corn production expected to come in at 69.03 million metric tons versus 70 in February, 88.14 versus 90 in February. So we're seeing that definitely reflected in this data here. As far as Argentina goes, their numbers are falling a little bit as well. Expected to produce 23.25 million metric tons in corn versus the February estimate of 24. And then as far as the beans go, expected to produce 53.5 million metric tons versus 54. So Argentina not expected nearly as bad as Brazil, but you can see that the weather situation in Brazil is not what it once was. It was nearly ideal there for quite some time. That has obviously changed, and the trade estimates reflect that data, whereas a lot were thinking it's higher. Now it's lower. Some don't think that's even low enough, so we'll have to see what the USDA says on Monday. So that's all we've got for today. If you have any questions, let us know. Otherwise, have a great weekend, and we'll see you Monday.
This material is conveyed as a solicitation for entering into a derivatives transaction. This material has been prepared by a Daniels Ag Services broker who provides research, market commentary, and trade recommendations as part of his or her solicitation for accounts and solicitation for trades. Daniels Ag Services, its principals, brokers, and employees may trade in derivatives for their own accounts or for the accounts of others. Due to various factors, such as risk tolerance, margin requirements, trading objectives, short-term versus long-term strategies, technical versus fundamental market analysis, and other factors, such trading may result in the initiation or liquidation of positions that are different from or contrary to the opinions and recommendations contained therein. Past performance is not necessarily indicative of future performance. The risk of loss in trading futures contracts or commodity options can be substantial, and therefore, investors should understand the risks involved in taking leveraged positions and must assume responsibility for the risks associated with such investments and for their results. You should carefully consider whether such trading is suitable for you in light of your circumstances and financial resources. You should read the risk disclosure accessed at www.danielsagservices.com. Daniels Ag Services is not affiliated with, nor does it endorse any trading system, newsletter, or similar service. Daniels Ag Services does not guarantee or verify any performance claims made by such systems or services.